I want to talk markets. The Fed with Mohamed El-Erian. He is here, Wharton professor, chief economic advisor at Allianz, longtime friend of Squawk Box. Good morning to you. The ceasefire is not much of a ceasefire at all. And I don't know where you think or how you think that should or should not be impacting markets. You're looking at oil up a bit, but actually not a shocking amount. And while equities are off a bit, again, not a shocking amount, at least as it relates to the Middle East. We could talk about AI and the AI trade, but what do you see driving all this?
So it is having some spillover effect, but they're very contained. I think there's two reasons for this. One is the markets deeply believe that these skirmishes are going to just remain skirmishes. It's not going to evolve into outright conflict yet again. It's not going to evolve into a long-term closure of the strait. And then the second issue is there's so much else to focus on. And most of what else you have to focus on is positive. So you put these two things together and the market says, okay, I am going to reflect this in Brent going to high 70s, but I'm not going to take it to high 80s or 90s, which is where it would be if you believe that this is going to be much bigger than what it is.
Do you think that's the right call?
I do. I think it will be contained. I think neither side want to go back to a full conflict, but both sides want to make their point for domestic reasons.
You said there's a lot of other good reasons to overlook what's happening in the Middle East. What's that? What's on your list?
So this is going to be a huge week. We get the inflation data. We get Governor Walsh going up to Congress. We get the retail sales data. And all this within major transformations going on. So what am I looking for? I'm looking for this set of inflation numbers to say the peak of the inflation cycle. Retail sales to stay pretty strong. And continuing to see this fundamental transition to a more modern, forward-looking, reform-oriented Federal Reserve that's dragging the rest of central banking with it.
Let me throw one other piece into our little pot. It's an interesting piece in the Wall Street Journal this morning about the bond market, and specifically some of the bonds that are being sold, frankly, by the SpaceX's, NVIDIA's, and others of the world, and just how much appetite or lack of appetite there really is for what is clearly the single industry that it seems to be driving all of this.
So if you look at my post in X, if you look at an article I did for the Financial Times a month ago, if you do a very simple sources and uses of funds, what we used to do all the time in the old days, there is no way this bond market can fund all that the tech platforms need, all that the governments need, and all that the other corporate needs without higher yields. It just doesn't add up.
Okay,
and you saw that in Amazon. You saw two things happen in Amazon. One is people had to sell something else to buy Amazon. And despite that, Amazon had a lackluster performance last week in terms of its new bond issuance.
Okay, so if that's true, what does that mean for equity prices?
So equity prices, of course, you never want to see higher yields for equity prices, but that's not what's driving equity prices right now. What's driving equity prices is this belief that when you look at the transformations ahead, the U.S. will continuously outperform the rest of the world. And I think that is a correct assessment. Now, how much will they outperform in absolute sense as opposed to relative sense? That's harder to tell, but I have no doubt they're going to outperform in relative sense.
Just to the bond implication, the same thing, right? Like that's telling us what? That investors want to get paid more if they're going to fund this, or there's just not enough money to go around?
So there's always enough money to go around. It depends on what price.
Places.
Yeah, right. What price. So it's going to be taken from elsewhere. And what you're seeing is being taken from other exposures, other bond exposures right now. The hope is that you manage to attract more money from the rest of the world. But as we discussed in a previous discussion, if you look at the traditional sources of funding for tech in particular, which is the Middle East, they will not be as forthcoming as they've been in the past. They've got a lot of local demands for funds right now.
Because of the war that's happening right now?
Correct. Because massive reconstruction. And also, like everybody else, they realize that they need more resilience. So you're seeing more pipelines being built. You're seeing a lot more resilience being built in the system. And like any corporate CEO will tell you, resilience is necessary but expensive.
That's not a commentary on Amazon or what it's doing with AI or their belief in AI. It's just that was a big slushing pot of money that was floating around looking for a place to go. And then they realized, wait a second, we got to put it here to work at home for other things.
Correct. I mean, I am a big believer in the transformational ability of AI. I'm also a big believer that's going to cost a lot of money. So if you look, the sources of funding is a little bit less. The uses of funds is a lot more. And the only way you get this to equal without a recession or anything awful is higher yields.
But I think the thing that I'm trying to think about is if, in fact, there's not enough money to go around, but there's going to require a lot more cost to all of these companies, that should be reflected in the stock prices, no?
So it is. I mean, if you look, we no longer have the straight up thing that we've had. I think people are now realizing two things. One is it's more expensive than we thought. And two, not everybody's going to win. So the venture capitalist mindset is starting to set in, and that's why you see a bit more caution in terms of investors. And I think that's a good thing.
Do you think we're at a fair price now? Do you think that there's a big opportunity to move up? I mean, part of it is, the reason why I'm thinking about the move up or a continued move up is I think Kevin Warsh needs a move up to actually do some of the things that he wants to do.
Like?
Well, it depends what you think he wants to do with rates.
No, so I think there's two issues. The economic payoff in terms of productivity is going to be significant. What you don't know is how many of these companies are going to ultimately succeed, because this is an arms race in terms of investments. So if you ask me, on average, is the market fairly priced? I say yes. Individual names, then I'll say to you, who's going to win? Who's going to win this race? Because whoever wins this race, the payoffs are going to be enormous, and then investors in the others are going to discover venture capital reality, which is one or two may win, but the rest are going to be less so.